Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Happy Monday to you. Hope you're having an amazing day. We're taking a look here at Pepe. And just to preface here, yes, if you saw our Twitter, it shows suspended. Essentially, they're just preventing any other scammers from scamming our members. Okay, so it's a simple precautionary measure from Twitter, so just keep in mind it's not a huge deal. We'll be back up and running soon. We've been reassured of that. We just had to provide some additional information to make sure that we are who we say we are. It's actually a good thing to protect you as a consumer. Okay, so just bear in mind that's just temporarily suspended for the moment, nothing to worry about. That being said, let's go ahead and take a look here at the daily here for Pepe and work our way down. We finally have some data here to rely on. Obviously, MACD not so reliable right now, but we got some good information here from the RSI, whereas we're seeing that continuous hold above 50 on the RSI. Now, what that basically just means isn't that the price is going to just shoot down or shoot up from here. It just implies that we're on the right side of the track still, and we're still in the overall sense of things bullish because we're maintaining a price point above that level. And anytime you're over 50 on the RSI, it's a very, very positive sign, specifically on the daily. Okay, so we haven't come below that. That's not a bad thing. The one thing we do want to pay attention to, though, is the MFI, the money flow index, is coming out. So there's more money coming out of this coin than in the coin within the last 14 days. Is basically what it's telling us. So that's disadvantageous to an extent, but also par for the course when the price has to retrace like that, because it still factors in some of the time in which the price is going up too. Nothing to really worry about there. What I do want to note here is this little ascending trend line. Basically, keep in mind, we put that on the charts from yesterday because it's concurrent with this moving average. So if you see this 20-day set moving average on the charts here, it's effectively telling us that we're well above that and we're maintaining above that price point. So if we can continue to ascend with this trend line, we're going to be in good shape. I'm willing to speculate if we lose this trend line, we'll be under 50 on the RSI, and at that point we'll have a different conversation. Okay, but between now and then, I would say that we're more likely than not to continue to ascend because a trend line will continue until it doesn't. I know it's a funny thing. Every time I say it, I crack up because it's literally one of those things where it has to continue until it doesn't. Obviously, it won't if it doesn't, right? But if we consider the overall sense of things here, when the price breaks down below, we have to reevaluate, and that's what it boils down to. Okay, so nothing to super concern yourselves with, just something we want to pay attention to. As per usual, it's always the case. One thing I can see here, and let's go ahead and make this a little clearer, we can kind of see the price is coming down. Let's go ahead and extend out our Fibonacci retracement levels. We can kind of see here that this 0.382 level is trying to hold, but hasn't held fully yet. Might be potential resistance. We're going to have to wait for a little bit to see. The key takeaway here is that we're still ascending positively above the 20-day SMA on the daily. That's a good sign. We are establishing still higher lows to this point if you consider this being a higher low. All right, I know that's a bit of a stretch, but generally speaking, as long as we don't go below this level here at about 120, 115, we'll be in pretty good shape to probably see the price stay where it's at or higher. That being said, though, we are testing this level here. Again, we got this parallel support. So we got this parallel support level here. We're going to put that up over sideways there, and then we're also going to kind of take a look at the fact that we are descending as well. So let's actually go ahead and stretch this out a little bit so we can pay attention to this level here later and kind of see, because you got to keep in mind, anytime you're originating from the bottom, right, or you're originating from lower than the current price point, and the price works itself into a triangle or a wedge, whatever word you want to use to describe it, it's more common for the price to break up than it is down. Keep in mind, the inverse would apply too. If the price is coming from here into a wedge, then it would probably come down further because it's a continuation. Right? This is a bullish continuation wedge type of pattern. The probability of it coming up from here is higher than it is to go lower. Just keep in mind, we got to establish higher lows and higher highs first in order for that to occur. The most important thing, as I've always talked about in the past, is higher lows. So if we can establish higher lows and continue, then we'll be able to reverse this trend and continue upwards. If we keep establishing higher highs without higher lows, it's not going to matter. This trend won't reverse itself. So pay attention to higher lows, specifically on the 4-hour time frame. I think that's going to be important to recognize. We probably won't get that for another 24 hours. Taking a look at the RSI at the 4-hour time frame, we're still below 50 on the RSI. We cut down below there sometime yesterday. And as a matter of fact, this is disadvantageous to an extent because that could imply that we have a new resistance level and the price comes down low. So once again, the 4-hour is not looking fantastic here. We are also seeing a bearish type of divergence on the 4-hour, which isn't super strong, but it's still enough to notice. Okay, so be sure to pay attention to this and see, what's going on here moving forward. But those are two things that are not great. And in the overall sense of things, unless we can break out here in the relative near future, then we're not going to be in a position to expect the price to go higher. That's more so a bearish sign. So the 4-hour is not fantastic, just to kind of summarize it that way. The 1-hour is looking a little better here because we got this double bottom kind of forming here where it does imply the price could continue higher. More importantly, we have this parallel low here where the price is bouncing. It's potentially a double bottom, but once again, double bottoms on 1-hour time frames are less impactful than they are larger time frames. So this could just be a fake out. It could be something that continues, but I don't like to reach for straws, if you will. I'm not kind of a hope and pray kind of guy when it comes to trading. I do in my personal life, different story, but what I'm getting at here is the important thing is we look at the data we see so far. The 4-hour gives us a lot of indication that we're going to probably see further downside. We have this one pattern, an ascending type of wedge pattern that could break to the upside. If it doesn't break, we can expect it to continue lower. The key here is that we need to break through this trend line and continue to establish, at the very least, once again, a higher low to continue the price action higher. Okay, so for right now, we're really not looking that fantastic. Don't put a lot of faith into just a double bottom, just say on a smaller time frame or an ascending wedge. I would say the moving average convergence, divergence, actually diverging on the 4-hour and us breaking below 50 on the hour side, those are probably more impactful indicators here, letting us know the price action is probably not going to continue upwards from here. But again, stranger things can happen. So keep in mind, there's a lot of different things that factor in here, but if this volume doesn't increase soon, then we're going to see the price action kind of continue to bleed out. Okay. Good news is this last hour of volume is above the most recent average of volume. That's a good sign, right? If we can stay above that, as we've seen here previously, if we can stay above that moving average, we're going to be in good shape here. So ideally in the next couple of hours has a little bit more strength behind it, if you will, and that's going to be the only way that we're going to be able to see this turn around. Honestly, it's not great. So let's go ahead and take a quick peek here. At the very last thing here, we're going to look at the Ichimoku cloud and see we're inside the cloud. And that's typically not a great sign. It just implies you don't want to take a position until it breaks above or below. Okay, so until we have a confirming closure above the 184 range, 184,000, then we have no reason to take a trade, right? Because again, the price is going to come up here, probably get rejected, continue potentially lower. There's more likelihood of the price action going down than up at this point, just based on what we've seen here so far, right? So again, if that 20-day simple moving average holds on the daily, this ascending trend continues, we're going to be in good shape. We lose that, we're going to naturally break below all relative strength and moving averages, and we're going to be in a position where the price action will likely retest its most recent low range of 137 to roughly 110. It's right in that range. Okay, so we'll pay attention to see how that works out, but for now, this doesn't look fantastic. We got to close, I would say, at 184 or higher to get above that cloud in order for us to have any legs to stand on moving forward. All right, so I hope that worked out well for you, or that helped you. I know it's not what you're looking for, but I'm just always going to shoot you straight and make sure you get the right information based on technical data. Again, take emotion out of it. Regardless of how you feel about this coin, do you really think it's going to continue to bleed out or go up? Comment below, let us know. If you feel different, that's okay. There's definitely a lot of different things you can take from this here, but for the most part, we see slightly more disadvantageous information, leading us to believe that we should see further downside. Very last thing, please be careful and cautious as a consumer. Never trust a direct message from somebody that says they're me or my admin, okay? Only myself and my admin will ever work with you directly if you message us first, and we'll never try to solicit you for information or try to get account information, none of that stuff, okay? So just like to say that, kind of wrap up with that, because again, our Twitter was impacted because of scammers and those people that are trying to get one up on you. So be cautious and careful. Feel free to direct message us. We're more than happy to respond and communicate with you, but we'll never directly message you first. And obviously, just be careful with how you make your own investment. Always take ownership of your own investment. Never try to invest money with other people. We simply teach you how to trade. We have trade signals. Totally different story. But once again, just be careful with that. Thanks again for joining me here. Hope you have a great rest of the day. We'll see you on the next one. Have a good day. Take care.